This video is for educational purposes only, not financial advice. Past performance does not guarantee future results. Always consult a certified financial advisor before making any investment decisions. What if I told you there's a single investment that gives you a piece of 500 of the biggest companies in the US, including Apple, Microsoft, and Amazon, and it costs almost nothing to own? Today, we're breaking down VOO, one of the most popular ETFs in the world, and whether it's the right choice for you. Hey everyone, welcome back to the channel. If you're new to investing or looking for a simple, low-cost way to grow your money over time, you've probably heard of VOO. If you're watching from the US, hit subscribe because we drop a new ETF breakdown every single day. In this video, we'll cover what VOO actually is, who manages it, what companies you're investing in, not just the top 10, its performance over the last 5 years, fees, dividends, and future outlook. And finally, should beginners invest in it? Let's get started. VOO is an ETF, which stands for Exchange Traded Fund. Specifically, VOO tracks the S&P 500 index. That's a group of 500 of the largest publicly traded companies in the United States. Think of it like this. Instead of trying to pick individual stocks, VOO lets you invest in the entire US economy in one simple purchase. So when you buy VOO, you're buying small pieces of companies across industries like technology, healthcare, finance, energy, consumer goods. It's basically a set it and forget it type of investment. VOO is managed by Vanguard, one of the most trusted investment firms in the world. Vanguard is known for low fees, long-term investing philosophy, investor-first approach. It was founded by John C. Bogle, who basically pioneered index fund investing. So when you invest in VOO, you're trusting a company with decades of experience and a strong reputation. Most people only hear about the top 10 holdings like Apple, Microsoft, and Amazon, but VOO is much bigger than that. Yes, the top companies include Apple, Microsoft, Amazon, Nvidia, Alphabet, Google, Meta, Berkshire Hathaway. But here's what makes VOO powerful: it holds hundreds more companies across sectors. Let's look beyond the top 10. Healthcare companies: Johnson & Johnson, Pfizer, United Health Group, Eli Lilly. Financial companies: Morgan Chase, Bank of America, Goldman Sachs, Morgan Stanley. Consumer brands: Coca-Cola, PepsiCo, Procter & Gamble, Nike, McDonald's. Industrial and infrastructure: Boeing, Caterpillar, General Electric. Energy sector: ExxonMobil, Chevron. Retail and services: Walmart, Home Depot, Costco. Tech: beyond the top giants: Adobe, Salesforce, Intel, Cisco. So instead of betting on one or two companies, you're spreading your risk across hundreds of businesses. That's called diversification, and it's one of the biggest reasons investors love VOO. Over the past 5 years, VOO has delivered strong long-term returns. While the market goes up and down in the short term, historically, the S&P 500 has averaged around 10% annual returns over long periods. VOO closely follows that performance. In the last 5 years, despite events like COVID-19 crash, inflation spikes, interest rate hikes, VOO has still shown solid growth overall. Important point: this is a long-term investment, not a get-rich-quick scheme. One of VOO's biggest advantages is its extremely low-cost expense ratio, 0.03%. That means if you invest $10,000, you pay only about $3 per year. Compared to many actively managed funds, that's incredibly cheap. Lower fees equals more money stays invested equals more growth over time. VOO also pays dividends, which are small cash payments from the companies it holds. Dividend yield: roughly 1.3% to 1.6%, varies slightly. You can take the cash or reinvest it to buy more shares. Reinvesting dividends can significantly boost your returns over time. So what does the future look like for VOO? Since it tracks the S&P 500, its performance depends on the US economy. Key growth drivers include technology innovation, AI, cloud computing, consumer spending, corporate earnings growth. Risks to watch: recessions, interest rate changes, market volatility. But historically, the US market has continued to grow over decades and VOO rides that growth. So, should beginners invest in VOO? For many people, The answer is yes. Why? Simple to understand. Highly diversified, very low cost, proven long-term performance. But keep in mind, it still goes up and down. You need patience. Best for long-term investing 5 to 10 plus years. If you're just starting out, VOO is often considered one of the best first investments. To sum it up, VOO is a low-cost, diversified, and beginner-friendly way to invest in the US stock market. If you're looking for a simple strategy, this might be it. If you enjoyed this video, don't forget to like, subscribe, and let me know in the comments. Would you invest in VOO, or do you prefer picking individual stocks? See you in the next video.